So what we're going to do now is we're going to watch a video about OpenAI, and they had an interesting week. When the week started, there was a little bit of problems there from the forerunner of OpenAI, Sam Altman, because he got a little angry with one of the investors who was talking about some strangeness going on with their $1.4 trillion deals that they've made. And then there were thoughts that, oh man, would AI need a bailout? Maybe they're making themselves too big to fail. Then OpenAI came out and said that they didn't want that. But then someone came out and said that they might want that. And then someone said, well, they didn't want it. And so it's been a strange week. And what it's caused the stock market to do is kind of pull back and say, whoa, whoa. And now we're seeing some downturns, and now we're seeing evidence of there being a bubble. But let's watch this video and get some more detail about it and see what's going on and what happened today.
It's no secret that AI's ambitions and promises are sky high. And perhaps the biggest wheeler and dealer in the space is Sam Altman and his OpenAI. Altman's saying that OpenAI is on track for $20 billion in AI-related revenue this year. That's ahead of its own internal goal of $13 billion. They've got a massive goal of $100 billion or more in sales in just 5 years. But here's the reality. Some on Wall Street are wondering if the math really doesn't compute. Adding to some of the concerns, CFO Sarah Friar floating the idea of a kind of backstop from the federal government for the nation's AI build-out, those in comments on Wednesday, I think, to the Wall Street Journal. That was an idea which apparently made White House AI czar David Sachs quite unhappy. And OpenAI now suddenly on the defensive. And to tech.
Okay, so let me translate to English what he just said. So basically what he's saying is that OpenAI has made a lot of promises, and they have said, okay, yeah, we're going to be making almost $100 billion a year by 2030. And now there's a few problems because people are saying, okay, how exactly are you really going to pull this off? You've made a lot of deals, and many on Wall Street are starting to think, oh, they made a lot of deals so that they're making themselves too big to fail, so that when they don't deliver on their promises, the government will be there to bail them out. Sort of like the 2008 great financial crisis, where the government was there to bail out banks and bail out the auto industry. They're saying that they'll do that with AI, and that's OpenAI's play into this. And then you saw the gentleman who works for the government saying, no, that's not the case. We're going to let the company fail if it will fail. Well, let's see what more is said about that, because does OpenAI agree, and are they even looking at this? Well, let's watch the rest of the video to see. I just wanted to translate that into regular English so that people can understand what's going on. Let's watch the rest.
Heavyweight is weighing in. Noted tech investor Brad Gerstner offering his take on OpenAI's revenue goals this morning. Listen.
I've watched the world's great entrepreneurs, Steve Jobs, Elon Musk, Sam Altman, get frustrated by investors asking those questions. I kind of look at it, I like somebody who's feisty and says we're going to blow those numbers away, but at the end of the day, they have to deliver it.
We obviously should note that Gerstner's firm, Altimeter Capital, is an investor in OpenAI. So here now with more on OpenAI, sort of.
Well, that's a good thing to throw in there. He's an investor, so is he a little biased? Yeah, but you know what I like? He did just say what it was. At the end of the day, there has to be a delivery of these promises. So you see what's going on this week. You see how now there are some deeper thoughts going on with what not even OpenAI, but just AI in general is capable of. Let's watch more. Let's see.
Semi-damage control campaign is our own Mackenzie Segalos. And Mackenzie, I do want to note to our audience that Sarah Friar, who is the CFO of OpenAI, was scheduled to speak with Sarah Eisen today at that same conference in California. We promoted the interview yesterday, but last night, Friar, we don't know why, backed out. Again, don't know why, but kind of a shame Sarah didn't get to ask Sarah Friar to go into more detail. So what do we know as of OpenAI and some of these promises right now?
We know that Sarah Fryer's comments to the Wall Street Journal really struck a nerve with Wall Street, tapping into that AI bubble anxiety. You've got Gil Luria at D.A. Davidson really pointing to this larger narrative that people have been talking about, whether OpenAI is at this center of a web that could be a single point of failure. And Brian, I got the stock chart up for Oracle. It's trading at around $235 right now. That's down below where it was before it announced that OpenAI deal. It's a huge run up, its biggest price run since 1992. It's still come back down. And that's Gil Luria's point here.
So let me explain that real quick. What they're saying is that there's a company, there's a corporation, Oracle, who made a deal with OpenAI. The stock market shot up on expectations, but now because of these people starting to have doubts about OpenAI and just AI in general, all the money that was generated through that deal that they made with Oracle, all of it is down. All of it is gone. So that's already an example of how fear grows when people start to feel like this is a bubble. All that money has now disappeared. Let's continue.
Names like Oracle and Broadcom, these guys are placing orders to fulfill the huge compute contracts that OpenAI has signed with them. And then there is now this concern, newly, resurged this week off the back of those Fryer comments, of whether or not OpenAI can pay to fulfill all these contracts.
Yeah, this is very critical to understand. And I know for our audience that doesn't do this for a living, it might start to get a little bit convoluted. Heck, it's probably convoluted for those of us, me, who do this for a living. But I want to give kind of an analogy of what's happening here. And Mackenzie, tell me if I'm right or wrong. Let's say I agree to pay you next year a fixed amount of money. I don't pay you, but I say I'm going to pay you. You rely on my promise, and you go out and you buy a lot of things based on that money. Now you're on the hook to me. You better hope that I do what I say and pay you the money. Is that kind of where we are? OpenAI is making a lot of promises. Companies are relying on it, but they better hope that OpenAI comes through with the cash.
That's exactly right. And it's not just names like Oracle and Broadcom. You've also got the biggest hyperscalers who are tied up in that OpenAI trade. Microsoft, who also a big investor in OpenAI to the tune of $13 billion, they just signed a $250 billion cloud compute deal with OpenAI. Amazon Web Services, a $38 billion deal with OpenAI. And it's not like these hyperscalers have that amount of spare compute lying around. They're going to have to build to match that demand, which is why you saw those revised CapEx numbers when they all reported last week.
But it's not clear. We don't know, because OpenAI is private, if any, some, all, none, whatever of that money has actually been wired to those companies, right?
Well, a lot of these deals, and NVIDIA is a part of this as well. They signed a $100 billion deal with OpenAI, but these deals are structured in a way that we haven't seen before, essentially swapping equity for chips. So in the case of NVIDIA, they're investing into OpenAI, so they get an equity stake. And so they're giving OpenAI cash, which ostensibly goes into a big pool of money that they can then use to pay NVIDIA for the chips they're buying. But with AMD is handing OpenAI equity, 10% equity in their company, virtually for free, again for chips in return. So there's a question of you're giving some to get some, and that's the concern here of kind of swapping money between the same players.
Yeah.
You're seeing a lot.
Okay, I mean, she alluded to it. Basically, what's going on, again, for the common person watching this, is that they're just giving money back and forth to each other. And they're making promises to each other, but it all hinges on OpenAI, coming through with those promises. And I want you to pay attention to the video title here. It says, OpenAI execs reject the idea of federal support, say revenue will fund 1.4 trillion compute bill. So they're saying that they don't want federal support. Now, remember how this video started. The rumor was that they were going to get too big to fail, basically. They were going to become such a part of the United States economy that the United States economy or the United States government would not let them fail. A government official comes out, says, we will let you fail. And then they come out and say, no, that wasn't our plan. Well, this is interesting. Let me show you this. This came out just tonight. OpenAI's Altman urges U.S. to expand the CHIP Act tax credit for AI growth. OpenAI CEO Sam Altman on Friday doubled down on the company's ask for the U.S. to expand eligibility for a CHIPS tax credit as the country accelerates efforts to secure its position as a global leader in artificial intelligence. So now they are asking the government for help, it seems. So what can a common, ordinary person do? Because this is a huge bubble. We are talking about the S&P 500. About 30% of it is tied up in 7 corporations. And guess what all 7 of those are doing? Investing heavily in OpenAI. In fact, if you look at the United States economy, the only thing that made the economy look good in the past year was because of all the spending on AI. Everything else was in a downturn. So what this means is that if the AI bubble pops, a majority of those who have money in the stock market, and many people do, it's not just those who invest, but also those who have 401ks, that is going to drop dramatically, and people will have a hard time. And see, OpenAI knows this. So now we see kind of the deal that's seemingly being made. So what does an ordinary person do in this? Well, the 3 things I always say: make sure you're out of credit card debt, build up an emergency fund, preferably 6 to 12 months, and simplify your life, or live a simple life. What that means is that your money, if you are investing in the stock market, DCA into it, dollar cost average. What that means is that, yes, you're taking a little bit of money out of your paycheck and putting it into your 401k or into the S&P 500, something safe, not something speculative, and that is money that you can afford to lose. Because if this bubble pops, and it seems like maybe when it pops, for many who have overinvested and overextended themselves, it is a crash. But for those who have their money and they are spending wisely and they are living simple lives, instead of it being a crash, it could be a buying opportunity, depending on how it goes. So I'm going to end it there. There's a lot talked about today. I'm going to let you people have a good night, good day, whenever you're watching this. I'll talk to you later. Have a good one.